Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. When I left you last week, I said that I expected that this could be a very interesting week ahead, and it certainly was. We're in the middle of reporting season. And that is when there's always the possibilities of having a surprise or two to liven things up. If we couple that with the reality that a large number of the FANGs are sitting close to key breakpoints, then on top of earnings surprises, there was always the probability that we might get an SVA sell or buy signal as well. As it turned out in this past week, we got all of the above. Well, let's not waste any time. Without any further ado, I really need to take a close look at those FANGs and what went on this past week. But, as always before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon, and Amazon just cheerfully keeps motoring along its bubble price just above and maybe sort of oozing away from there. Is that good or is that just neutral? Well, if you take a look at the return on equity of the company and the growth rate of the balance sheet, just drifting along the bubble price means that the company is, or the shares are rising at an annualized rate of 18%. Not shabby these days. Alphabet has been moving along its MSG price. That's 5.5 times book value. It's picking up a little bit lately. I see the fair market value kind of flattening out here a little bit, but of course remember that the company has laid off a huge number of workers, and there could well be a nice increase in earnings come this next 12 months. Meta, very much like Alphabet, had been drifting along its mid-super growth price. It's now picking up. And you remember last week I showed you the long picture of Meta, and its long-term historical target was its bubble price. And I think it may be hitting there again. Microsoft had been kind of drifting, but then it started to move up nice and steadily, and it is very, very close to its HB2. Now, that is a critical price because the last couple of times it got there, it would not get through that level. So we are kind of crossing our fingers and saying, I wonder, does this leader in the AI revolution, does that lead the way higher and break out? We'll see, and I would guess fairly shortly. Netflix, what an interesting story this is, eh? 2 quarters ago, the company kind of disappointed in its earnings, and the shares drifted off, and then it broke back down below its bubble price, and it kind of looked as if it was, and then it had just a blockbuster quarter, and the shares just jumped over their bubble price again. Well, they were drifting along here, but sort of oozing upwards. They had another blockbuster quarter, and the shares just leapt over their HB1. And my guess is that we're now looking at the HB2 ahead. That, by the way, is 12 times book value. NVIDIA had been, again, it had been moving up fairly nicely to its HB6 price. And you'll recall that I said that the HB6 was a very long-term high for the shares, except for a little while of about 6 or 8 months when the stock actually got one breakpoint higher to its HB7, which is 44 times book value. Well, the stock looks as if that's what it wants to do. Apple came down, hit its what I call its putative HB5. That's 33 times book value. And I say putative because, of course, Apple is a buyback stock. And what we don't have right now is the latest quarter. However, the company is reporting early next week, and by next Friday, we're going to be finding out just exactly what is happening to Apple. Why is that important? Well, if I show you a 5-year chart of the stock, in which what I'm doing here is I'm plotting the return on equity of Apple against its valuation, that's its price to book, you'll see that the two kind of go hand in hand. And that ROE was rolling over, and so was the company. Now, what will be very important to see is what actually did happen in this latest quarter. In other words, has the company gone back to powerfully buying back its stock? Is the ROE going to flatten out, and therefore the valuation flatten out as well? I think we're going to see next Friday. And finally, Tesla. Well, remember last week that I said, look, here is a stock. It has broken support at its HB2. That's 12 times book. Now, I said, look, we have what we call our 3% 5-day rule. When a stock breaks down, what we do is we say, okay, we'll allow it to go down 3% and can hold there as long as 5 days, after which it had better recover. If it does not, then you'd better bail out. And you see that happened here earlier this year, and it recovered. Well, we went 5, 6, 7 days, and it didn't. And then the company reported, and kind of all hell broke loose in the market. Okay, to briefly summarize what happened, my summary last week was quick and easy. 5 of the 7 of the so-called Magnificent 7 stocks in general were oozing higher, and given the promising words from the Fed, I suspected that some of the risks in the market have been modestly alleviated, despite last week's apparent setback in the inflation rate trend. Following on from there, as we saw this week, the FANGs are cheerfully heading higher. Amazon, Alphabet, and Meta, notably, all look strong and positive and are coming off strong valuation support levels. Microsoft did break out of a kind of a weak sideways trend and has now risen till it is almost close to its HB2 price, the resistance level, which it could not surmount the last time. There are no guarantees in life, but with the general strength in most of the FANGs, I suspect, that Microsoft may be close to rendering a renewed buy signal by breaking out here, although I am not spending my profits as of yet. On a very positive note, Netflix looks to be in the midst of a nice breakout. thanks to its late January quarterly report, which maintained that powerful trend of favorable, strong earnings and sales gains, carrying over from the previous quarter. It's almost a characteristic of these shares now, that the share price gaps up and over the next high breakpoint. It doesn't sort of ooze it there. It gaps up and over. And come to think of it, as I think you will all remember, that's the way that this stock came down as well. NVIDIA surged this past week up to and very slightly above its HB5 level for a brief moment. So maybe, perhaps, I hope, that the stock will retrace back up to its HB6, that's HB7 top and the HB6 breakpoint level. It's right there at the HB6 as of today. And I'm wondering whether we will need to see those fourth quarter earnings before we get a confirmed breakout. I wonder whether NVIDIA's price surge, which is clearly in hopes of an excellent quarter, was somewhat piggybacking on Netflix's nice numbers. I know they've got absolutely nothing to do with one another, but this is the other FANG that also had superb third quarter earnings. Something about lightning striking twice in the same place and all that. Now, we do not have a clean sweep of the FANGs. Apple and Tesla continue to be a major concern because of both their shorter and longer term potential growth outlook. Apple has shown no growth for several quarters now, and its fair market value measure is a full 50% lower than its current price, its current valuation. But all you old hands of FANG Friday know that it isn't earnings that drives Apple. It's share buybacks. Now, we should have the new balance sheet early next week, and then we will find out what impact the share buybacks have actually had on the current structural prices. So, grab a tenterhook or two, because we will be on them for the next few days. As far as Tesla is concerned, I've been saying that the electric vehicle market is looking a whole lot like the mid-1920s when everybody and his brother decided to start building gas-powered automobiles, which led to a catastrophic consolidation in the industry. Now, last week, I again pointed out that as much as I did not like the company, nevertheless, for any remaining optimists, Tesla was right then on the verge of providing a clear sell signal based on our 3% 5-day rule of thumb. Hadn't given it, but it was close. It was a stock I warned you to keep a very close eye on if you own the shares. Well, we did get the confirmed sell that I was expecting. And that came 2 days before the company reported disappointing numbers, which is when the stock really let go. In the management commentary that accompanied the earnings, that delightful expression, putting lipstick on a pig, really fit the bill for this year's quarterly management commentary. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.